Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day. As always, today we're going to be updating Disney stock. I've made videos in the past about Disney. Go check those out on the channel. You can see if I was positive or negative. Spoiler alert, I was fairly negative on the stock all the way through. Now the market is also quite negative on Disney stock. We're reaching lows of COVID with Disney. So I guess now we're in alignment, and I have that watcher position within the portfolio. So this video is going to be me walking through mentally for myself and for you guys, whether or not I'm looking to add more to Disney and actually build out the position, or if I'm waiting for greener pastures ahead via lower prices. Okay, so I'm going to be discussing or going over first, what were my main criticisms of Disney when they were at really elevated prices? And I was requested to cover Disney stock, and I think people were quite disappointed by my sentiment around Disney, especially how Disney had reached all-time highs not too far away from when I made those videos. And I believe I also made more videos after subsequent drops in Disney, and each time the same sentiment I felt towards Disney, I didn't feel towards Netflix. And there was some controversy. Go check out the Netflix videos I made. I made videos on Netflix when I was acquiring it last year. And that was an investment that did really well for us. And I discussed the differences between the companies and why I chose to invest in something like Netflix while that one was dropping versus something like Disney that was also dropping, and why I felt there was more value in Netflix than Disney. So what were the main criticisms? Well, I felt like Disney business model currently is too, or the business structure, it's way too bloated. There's so much fat in there. And I did feel that the organization was losing its edge, creativity, and creative-wise against competitors like Netflix. Now, the discussion always around Disney is around the IP, and that's the strength, right? I agree with people who say that. I think you're absolutely right. The IP is fantastic. It's the mismanagement of this IP that is more prevalent, the mismanagement of some of the assets. So that's basically the theme, mismanagement of assets. And that was a major concern for me back in the day. Also, considering the balance sheet destruction that occurred during COVID, people forget. And by the way, during that time period, the stock was hitting all-time highs. It seemed like the market didn't care that the company had just grabbed the sledgehammer and slammed it to its balance sheet. And the same company that you were investing in maybe in 2019 was a completely different company in 2021. Now, I do think it is evident that the surge in share price was due to the Disney Plus frenzy, right? All the revenue growth that was coming from Disney Plus. Now we're kind of seeing it. The narrative has changed. The narrative is now Disney Plus is a cash burning machine, right? It's not producing much for Disney. People are complaining that they should have kept it at the licensing model. I will talk about that a little bit here. But those were some of the criticisms that are being elevated right now. Now we're going to be discussing what the company is saying about its current strategy. As you can see here, this is the one from February. So we're going to start to paint a picture here about what the company is striving to achieve. And then we're going to discuss whether or not they're going to achieve those goals. So you can see here, this is when Avatar was coming out. So they're trying to show that off. And I think that this one is a good overview of the company, although a little patty on the back for my taste. But yeah, they have 100 years. I don't know if it's unparalleled storytelling. I would argue that Disney's movies are subpar. A lot of the classical movies that you know of, such as the classical Pixar movies, actually come from when Pixar was an independent company. The newer Pixar movies, they don't have the same level of impact or iconic storytelling as the ones of old, but they're still considered to be fairly good, especially in the animations department. Now, the creative excellence, again, pat on the back. I don't know if you can claim that at this point. Cherished intellectual property, I think you can say that definitely. I think you have one of the greatest IPs. How you handle that IP is a different story, especially in the Star Wars department. Unmatched longevity of our core franchises. I don't know what to say about that one. Unique ability to distribute this one, yes, you have a very good network. They are their size for a reason. And then talented, resilient, and dedicated cast members. I would say that if I go to a Disney park versus another park, I do feel like there is a whole level of different level of training that goes on there at Disney. So I'll give them that as well. Okay, so these were the goals that they set forth, and actually go watch my videos. These are a lot of the things that I said they needed to do. Okay, so this is good. The reorganization leadership, the bloat that I was talking about, boom, it's right there. Okay, again, go check out the older videos. They noticed it too. All right, so they're trying to move in that direction. We'll see how they do it, but they're trying to move that direction. Cost reductions, yes, the bloat. Basically, that goes with point one. Cost reduction, bloat. They had way too much bloat. Working towards achieving both sustained growth. Okay, everyone says that. We're gonna ignore that. Improving guest experience. Boom, another point that I criticize them for. Right, the lack of investment in the parks. Right there, okay? So they identified it. Primarily focusing significantly investing in our core brands and franchises. Well, I hope for the good, not for the worse, okay? Because what they've been doing as of late hasn't been, let's say, I don't think it's like sowing the good, I guess, fruits or seeds for the future. Because they have fantastic brands. It's just how they carry those brands. I feel like there's better ways to monetize it. Leveraging our platform to larger audience and optimize the value of our content. Okay, I don't see the ones on the right. Who knows what that means, right? That just sounds like corporate speak. Of course, I'm good. It's like saying I'm going to make more money. It's like, oh yeah, oh, I hope so. But yeah, we'll ignore those. But at least these 4 points, I'd say those are the main criticisms I levied against Disney. And what this tells me is now my thoughts are aligned at least with what management has decided to put in on this slide deck, okay? So that tells me that at least they've identified some of these issues. Now the question is, how do they go about correcting these issues? Because they could botch that correction and we could end up with something that's still the same or maybe even worse. Maybe they botch it to the other side. Okay, so strategic reorganization to optimize future growth, profitability, value creation, right? So what they're trying to say is they're trying to create a more decentralized organization. Now, this has a lot of positives. One of them mainly being giving the creative power back to the creatives. So this is something I said Netflix has done a really good job of kind of decentralizing the content base, right? Having so much content and just seeing what happens. And that's the point of this medium. It's meant to be or to foster creativity. So if you don't have that culture, then you're not going to produce the best content. And I believe that Netflix does produce among the best content out there. Regardless of what you think, that's what the data shows, is that for the vast majority of people or the audiences, Netflix content comes out on top. And then you have some other streaming platforms that might have one or two, all right, in ever so often. And that was the funniest part when I was doing my Netflix analysis. I think that people who look into stocks are of a different breed of people. And so we have to be very careful when we try to anecdotally use our current lives or what we're doing in our lives to then draw conclusions about the population at large. So we want to be very careful when we do that. And when we looked at the data, Netflix content was the best. Disney's was maybe one in one quarter, but really nothing of theirs came to the top. HBO Max would have at least one, and Apple would break through at some point, and Amazon would break through at some point. But yeah, I would say that the cost savings component, I want to be very cautious on this execution because I do want them to invest more in the parks, but at the same time, they have a lot of bloat. So kind of balancing that is going to be difficult, but let's see how they do. Okay. And then I'll kind of skip over some of this stuff because I didn't think it was too important. This is where we already discussed the better guest experience. This part, all right. So we continue to invest in our parks and experiences globally and other capital projects across Disney. So basically right there, the CapEx, I think that's at least great that they're identifying they need to invest in the parks. All right, great. Because there's a lot of old rides, mismanaged rides in some of the major parks that detract from the core guest experience. And I think those need to be updated, right? There's been a lot of neglect there. And then the spend on product and licensed content. Well, a lot of the criticisms I talked about in the very beginning about the licensed content, they're not moving completely out of that direction because it's still a good cash cow, but they are trying to build out their own content. And so that's going to cost money. But I do think that that is still a good business overall. Okay, so we will see this part. Okay, this I thought was hilarious because they're trying to say, look at our returns over this selected period, 2005 to 2020. And I love how they chose, 2020. But they had the dividend and the stock price appreciation over that time period. Great, cool. Past performance is not indicative of future performance. And this is a current issue that they're having, the secession question. So with Bob Iger coming back, and I don't like Bob Iger too much. I think he's one of the reasons why the company's in the situation that it's in. And Bob Chapek took the fall for it. So unfortunate to him, but I mean, I'm sure he's going to be fine. He's going to be crying with his dollar bills at night. But Bob Iger was a lot of the, let's say, reasons why there was so much bloat put in place. A lot of the balance sheet destruction was under him. A lot of the decisions at the top that caused a lot of the problems I'm talking about was actually Bob Iger, not Bob Chapek. And even though some people are blaming Bob Chapek, I will highlight to you guys that no. Quite literally, a lot of those issues I'm addressing were under Bob Iger. Okay, so now that the share price is back down to its COVID lows, or very close to its COVID lows, what am I thinking now? Well, I won't bury the lead here. Now, I think is my time to start to build out that Disney position. What size is it going to be? It's not going to be very big. It's not going to be a Netflix position because I do think in order for it to get to that point, I need to see even more pessimism. Now, what could help us get there? Well, let's say if the recession extends past what certain people believe it will be, or this drawdown, what it will be, if the consumer spending draws down a lot stronger, that sentiment alone, that news could bring down the share price of Disney to much more attractive levels than where it is today. Now, where it is right now, I think for me, I'm looking at a business that has a lot of good assets that have been mismanaged. So these assets are very valuable. They're gold, but they've been mismanaged. If all of a sudden I get a management team that I believe is competent and can execute in a direction where I agree with, which, okay, let's see where I'm at. Mentally, I'm saying I identify these issues and management has now talked about at least 4 of the issues I levied. Well, now I'm starting to get into at least somewhat of an alignment with management. I acknowledge the value of these assets. And so my issue was management. And now that management is changing in that direction, I think mostly due to that proxy fight they were just having, well, now the investment thesis, at least for me personally, starts to get more compelling. Okay, so I'm moving in that direction now, and I'm shifting my focus. So I have my size, my position in Netflix, and we just surpassed over the 100% return on Netflix. So that's great. Or at least very close to it. I forget if it's at or above or somewhere around there. But the position has done really well, and we're past the long-term capital gains now. So that's also good thing about Netflix position. But now I'm looking at Disney, and I'm just not going to be like, I'm not going to sell Netflix and then put it into Disney. I don't want that to sound that way. That's not at all what's going to happen. What's going to happen simply is new capital coming into the portfolio. I will start to park it into Walt Disney Co. If you're a Gold member or Sense member, you guys have access to the holding company portfolio, in which I contribute to the portfolio monthly, and then I see where am I going to allocate that capital. So don't be surprised if in both my personal and my holding company, I start to allocate Walt Disney or capital to Walt Disney Co. So some of the valuations, I'll kind of go through it just fairly quickly right before you. So I kind of went through Disney and kind of penciled out what are some of the things that I was looking for. And basically the price points where I really like Disney is anywhere between the mid 80s, where it's kind of there, to ignore, by the way, the 1%. That's not really a scenario I agree with. But I would say that if things get very bad, but at the same time, that's kind of where I would say Disney would become quite large position within the portfolio. There's this asterisk on there because I always compare my investment decisions to alternatives. Okay. Like, for example, I'll talk about PayPal very briefly because this is not a video on PayPal, but just that concept in just a second. But that's kind of like the range where I like to add, or I'm going to be adding Disney. And I think I'm going to take my time with it. I'm not going to rush into it. Now, that's going to be different from everyone. And remember, part of portfolio management is not only selecting the asset, but it's also the type of allocation you put into it. Okay. I will be doing an update video on Tyson because just a couple weeks after I made the Tyson video, we got to the price that was very attractive. So it's funny how life works. Patience pays off. Okay. All right. Now, PayPal. Where was I going with PayPal? Well, the aspect of PayPal where PayPal is under the price points of where I said it was attractive. Why am I not buying PayPal? Well, it's because I don't have infinite capital. I have a decent amount of capital that comes in, and I want to allocate it within its constraints to the positions that are my biggest ideas. And sometimes my biggest ideas in aggregate include some, ancillary positions, but I do want exposure to ancillary positions. And there might be something else keeping me away from PayPal. But I don't think, like I said in the PayPal video, I mean, the price is compelling now. It looks good, and it's. I don't change my mind of what I said before. Under that threshold, it looks good, right? So anyways, with Disney, I believe that it's kind of reached that place, and a company like Disney, I guess I would say, or focus in on the quality of the assets is there, great. It's just management. If management gets better, then we can see these assets start to produce a significant amount of cash flow, and therefore our returns could follow in a not the same, I wouldn't say the same trajectory as something like a Netflix. I'm not really expecting that, but a very favorable direction. Let's just say that. All right, not to overhype it, but yeah. With that being said, thank you guys so much for watching. If you guys want to see more videos like this, feel free to subscribe, and I will be doing live streams at some point. Also, some update videos on some of the other stocks that I mentioned here in this video. With that being said, thank you guys so much for watching, and I'll see you guys on the next one. Bye.